Well, it's time now for business, and let's begin as ever by taking a look at how the markets are doing. Firstly, how things closed up in the US on Thursday. Gains across the board at the close of play on Wall Street. Both the Dow Jones and the S&P 500 up almost 1%. The Nasdaq up half a percentage point, as you can see there. Well, it's a rather different picture in Asia today. The Nikkei's trading down 1.65%. The Hong Kong Hang Seng down a fifth of a percentage point. The Kospi down 2.3% almost. The Shanghai Composite, meanwhile, trading just below the flat line today. Well, for more on what we're seeing there, we can bring in Jameel Ahmad, Director of Investment Strategy at Naga. Hi, Jameel. How exactly should we understand what we're seeing on the markets? Why all the turbulence in recent days?
Well, actually, turbulence is exactly the word. There's two different reasons and basically metaphors I can provide for the global market volatility in recent days. Basically, number one, Christmas was already 1 month ago. And that Christmas present was provided to the markets when Joe Biden 2 weeks ago today, as a late present, said that his plan was to unveil a $1.9 trillion US dollar stimulus package to support the US economy through the prolonged pandemic, what they're impacted on the ground. So that was also a encouragement sign for investors. They're not going to get any more Christmas presents for some time to come. There'll be no more gifts provided, so they will start taking profits from positions. And we saw that the S&P 500 dropped steeply this week. It had its biggest one-day fall since October. And then the larger story that's really coming to light now is that we had what could be assumed as like a wild, wild west fight between retail traders, which are everyday single traders, and huge hedge funds, because essentially what happened is there was a forum where a hedge fund had been picked up as putting a very big short selling position on a particular stock, and a gang of individual retail traders then jumped on this trade, but in the other direction. So in layman terms, the retail traders started buying the share price and the hedge funds were trying to sell it. And eventually, actually what happened is that these retail traders did get squeezed from the market for irregular behavior later in the week. But that came as a winning battle in some ways, because hedge funds, which are seen as the machine, lost billions this week on a losing trade because of what happened from the retail investors ganging up and taking on an opposing points of view in a position.
Now, that decision to prevent retail investors from the market was extremely controversial. Can you take us through what's going on there?
Definitely controversial. This isn't over. We've had the White House has commented on it, very senior Democrats, very senior Republicans too. It's seen as squeezing the retail investors, which is the individual man on the street, from being able to compete in what is a very competitive marketplace. And they have a right as well to say, look, we are outraged that we have not been able to close our positions, we've not been able to enter new positions, and essentially the wealthier are able to get even more wealthy or even more opportune at this time, but we can't participate in the same market volatility. And this is a story that will continue to unfold over the coming days as well, because this one will not be going away.
And the Senate Banking Committee, as well as a few others, have been weighing in.
Yeah, they have as well, definitely. So the incoming Senate Banking Committee chairman, Senator Brown, has basically said that it's time for the SEC, which is the regulator, Congress, which we know is a huge political body, to come together to make sure that the US economy and the overall economy can work for everybody, not just the wealthier on Wall Street, but everybody can participate in the market. And it's gone further than that. House Speaker Nancy Pelosi has been quoted as saying that the trades are interesting. It's interesting what's happened in the market over the past couple of days. Whereas Elizabeth Warren has also gone to say that we want to see more day traders in this market. We want to see more participation. And there was already an underlying factor headed into the 2020 presidential elections that Democratic lawmakers specifically were going to cast a very big eye on what's happening in the market. Technology firms becoming very powerful over the 2020 because of the pandemic. And this particular episode is only going to bring even more light, even more attention from the major authorities to take a look at also what's happening in the speculative investment markets too.
And Jameel, what have we then been seeing with the share price of GameStop?
It's been phenomenal. Essentially, this tug of war began when somebody placed a huge position to sell this stock, which others then took an opposing point of view. And the reason why they put that position in the first place to sell that stock was because they thought the retail industry is in a very poor health because of the lockdowns and everything, so it should be in the demise. But what we saw instead was the GameStop share price moved up by something like 900% year to date already. It's going to be incredibly volatile today as well, and it moved from below $20 per share late last year to as high as just below $350 just 1 and 2 days ago. And again, we see that the share price and after hours trading before the US kicks off later today, we're already seeing a move about 50% either direction. So we do expect that Friday is going to be an extremely volatile day for this share price in particular as well.
Jamil Ahmad, thank you very much for decrypting what is a rather complicated story. Jamil Ahmad speaking to us there just a few seconds ago. Oh, he's back and he's about to go again. Thank you, Jamil.